Okay, folks, welcome to this week's Fife Property Market Update. So, we're now going to go over the properties that have come to market in the whole week just passed up to yesterday, which is the 8th of July. And then we're going to compare them with the number of properties actually sold in the same week. The great thing about this, it gives us an indication of supply and demand. I'm also going to talk about things like furnished lettings if you're a landlord, an investor, or potential investor, unlocking Fife Properties market secrets, unveiling the saleability secrets. This is quite an interesting graph, which actually shows you straight away. I'll show you in a wee while where the split is in the two-tier market is created right now in the Fife property market by price range, which means I'll be able to tell you exactly where the market is so buoyant in a particular price range, and then I'll be able to tell you where the market is stable and also where the market is probably been needing to be realigned. So hang tight there, and I'll just crack on. Okay, let's look at the numbers now. I'm just going to get up my screen here and share it with you. Unfortunately, for the people on Instagram, I can't really share anything with you because it doesn't allow me to do that live. So hopefully, if you want to go on afterwards, you can click on to YouTube and look up Fife Properties TV, and you will see the weekly Fife Property update for right now because I'm running live. Okay, so here we are right here. You can see across the market in the Cooper area, 13 properties actually came out to the market last week. 13 properties actually sold. So, no, like for like, buoyant market. East Neuk 9 came on, 7 actually sold. St Andrews 11 came on, 4 came on, 11 sold. There seems to be a huge demand for St Andrews now. I've got a funny feeling it's got a lot to do with intake for the university and the desire for people to be in the St Andrews area. Levenmouth 13 versus 8, so more properties coming on Levenmouth than actually being sold, which is quite surprising considering Levenmouth's a really good price point. Dunfermline 52 versus 42. Glenorchy 20 came on, 5 actually sold. Glenorchy has got a huge oversupply in last week. Kirkcaldy 29 versus 23. Overall, 140 properties came on. 109 actually sold. So that's not a high percentage actually sold in comparison. So let me take a quick calculation. 109 divided by 140 is 78% of the properties actually sold that came on. Now, not the exact same properties. We're just talking about numbers here. It's possible that some of these properties could take a lot longer than actually it is right now. So it's just a kind of like for like a stabilization. The health of the property market is the number of transactions more than likely, which is the most important. You can see with 140 coming on, that means 20 properties are actually coming on. So more or less what we're trying to see here is round about 20 people every single day are making a decision to sell a property. Now that will translate to round about 81% of that will actually go on to buy a property. Now, why do I say 81%? Because, and that's 16, by the way. So 16 properties, 16 people every single day in Fife actually make a decision probably to buy a property. Why do I say the 20 coming on translates to 16 actually going on to buy a property? Because some of them are actually people actually selling up and going into rent accommodation. Some are deceased estates, actually finally just selling off. Some are actually maybe selling 2 houses to go into 1 house. So that's why that translates into round about 19% of that population actually selling will not go on to buy a property in the Fife area. Some are actually moving out the area as well. So that gives a good indication about where it is. But overall, I always talk about weekly numbers and say that, you shouldn't look at them in isolation. You should look at them in the overall effect. So we can see what happens next week in terms of that. As I said, one of the most interesting things that came out of this was the show I did this week about unlocking Fife Properties market potential. This is actually quite revealing. I'm going to flip onto this chart here. You can see that right there. Now, when I actually went through this, we talked about, now, if you want to see this show again, it's on the link here. So you can click on the link, it will take you through. And if you click on the one that says Unlocking Fife Property Market Potential, Unveiling Saleability Secrets, it will go through in detail exactly where the Fife market is right now, exactly what it markets, what type of properties, like entry-level properties in Fife, mid-range properties in Fife, and upper quartile properties in Fife, and which and how each of these markets are actually performing. Now, we call it upper quartile because it's 25% of it's the upper market, the extreme upper market, which is in the Fife area, on average, the upper quartile is 300,000 and upwards. So we'll talk about that. Mid-range is 145 to 300,000. Entry-level properties, in other words, quick turnaround, are 145,000, which, no surprise, that is this cut-off for first-time buyers' land and building transaction tax relief. So this is actually quite a revealing chart here. It tells you straight away there, up to 100,000, you've got 96% of properties actually going on are actually selling, and are actually selling quite well. And this is a percentage of properties come on since the 1st of January. So this is how I've measured it. So everything that's come on since the 1st of January, I've measured exactly what's come on and when they've actually sold and what price bracket they're actually in. So this is a percentage of properties sold by subject to concluded missives. In other words, up to 100,000, 96% of them is actually sold. 100,000 to 150,000, 99% of 100% of these properties have actually sold. 150 to 200,000, 94% sold. 200,000 to 250, 84% sold. And then you drop down from 250 onwards to 75%. 66%, 61, 73, 81, 62, 69, and 63. So after the 250,000 price point, the market is relatively stable. But what's happening, what demonstrates to us, is everything from 250,000, 300,000 upwards is actually round about in the first 6 months, only 60 to 65% of these properties have actually sold. So it tells us straight away, and this is driven by the increase in base rates and the affordability that everybody can have every single month to be able to afford a mortgage to get a higher price point and actually purchase a property with a higher price point. So what's happening is base rates are going up and mortgages are becoming more. It's actually decreasing the amount of mortgage people can get against a property. So a mortgage at the beginning of the year was maybe 200,000 somebody can afford. Now, 6 months in, they could probably afford a mortgage on that same cost per month basis of probably around about 160,000 instead of a 200,000 mortgage. So it's getting the upper end of this market is the 250 and 300 and upwards. It's actually it's 65%, 65% is actually getting sold, but it's actually taking a lot longer to sell a property. And this is where the two-tier system has been created. So everything up to 250,000 selling quite well within a 6 month period. Everything after that is taking a wee bit longer. Well, 61% or 65% is actually selling. 35% is actually still on the market since they've been listed in the first 6 months. It could be some of these have actually just come on in April, for example. So we're only up to the end of June, which is when I did this. So April, May, June. So that you've only been on 3 months effectively. The average to sell a property, just in general, and remember, an average property price in Fife is round about the 178,000 mark. So the average of the £178,000 property in Fife to sell is round about 2 months to sell a property at that price point. So this is why we've got all that activity in the early numbers, early hundreds of thousands, which is up to 250, but it starts to peter off and level off from upwards. And as base rates continue to rise, if they do, we don't know what's happening yet. The Bank of England still determined to curb inflation. I think they're maybe just going a wee bit too far, and technically, by the time they find out it's maybe going a wee bit too far, it's going to have a big slowdown effect on the UK economy. But we'll see, because everybody's reining in spending right now. We could demonstrate that quite clearly in the last couple of weeks. We've not sold as many houses as we normally sell, but that's not surprising. But even though, apart from that, website activity is blowing out the water in comparison to what it is last year. So the number of people coming onto our website and coming through our social media channels, the number of people seeing all our stock is actually on the up. But the number of properties actually getting sold in comparison to what it was last year is down. But that is purely due to the fact that base rates are now going up. So what does it tell you? When I talk about in this show, actually, and I've got the script here, so the script's on there as well, by the way. So you're seeing what I'm seeing in here. So when I talk about in the show, I talk about some of the things that you would need to actually focus on in order to get that extra bit of activity on your property as a seller. And also what buyers need to do as well. And also possibly the thought process about when you put your property on the market, it was possibly a different market as it is maybe 3 or 4 months down the road where it is now. Therefore, possibly you might have to reconsider your price point and your expectations as well at the end. While we thought maybe 6 months ago that, yeah, we can get over the home report value and we're going to get a lot more money, and that's a really good potential in that current market. Now we're 6 months on, it's a different kind of market. Therefore, more realistic expectations have to take place. But that graph is extremely revealing. I love to base everything on facts. I do not look at opinions. I look at the facts first, and this graph clearly points this out to me. But if you want more information and you need more information, please feel free to message us. But again, you can click on that show. You can see the whole thing through. And then you could also, if you've not got time, you can listen to the podcast as well. Or you could just read the article. Article takes 3 or 4 minutes. And it's clear as day in terms of how it works, in terms of what it is right now. To back that up, I actually did another show. I'll talk about the properties actually coming into market real soon. Another show about the UK price index for Zoopla and where they thought property prices were and how they think everything's going so far. Now, according to Zoopla, the average sales and supply in terms of, so above average sales and supply, but fewer buyers in the market, according to Zoopla. That's what they're seeing coming through. Again, that podcast is on here and that show's on here, and you can click on the link and get through to that. But in a summary, demand is down and the percentage changed to the 5-year average by about minus 14%. The number of sales agreed, they're saying, Zoopla says it's up a wee bit, but not significantly. The flow of new supply is clearly up a lot more. So there will be a lot more properties coming to the market, a lot more properties possibly for you if you're still in the market, you're competing against, hence the reason why you need to be possibly considering how to be more attractive in your pricing in order to compete against that other person, because they'll have taken account of the current market is right now when they hit the market with their pricing. So possibly that might be something you have to consider yourself. And the stock of homes for sale has actually gone up. So new flow supply up 18% on the 5-year average. Stock of homes for sale has actually gone up overall, so still sitting on the market by 11% as well. So that's actually quite revealing for the Zoopla when they did theirs. Halifax are talking about, they're saying that prices have actually dropped in June by 0.1%, but they're spinning it by saying it's a 15-year, the biggest drop in 15 years. Okay, biggest drop in 15 years, but in the last 3 years, we've had the biggest increase in a long time of about 30% in terms of price. So I don't think 0.1% of a drop, according to the Halifax in June, is a significant drop in terms of house prices. After all, anyway, we'll probably be back at last year's house prices by the end of this year. By the end of this year, I reckon possibly house prices will be down by probably about minus 5%. At the very most, I would imagine. But we'll see what happens overall. And that's not really to be bothered about, because if your house price, if you had a house in the last 3 years, effectively you're still up 25% in equity, because it's been up 30% in the last 3 years. It's down 5% by the end of this year. 30 minus 5, 25% increase in the last 3 years. So nothing to be concerned about. However, if you're only buying one house, you're not actually making money on it if you're moving to the next house, because as one house goes up, your house goes up as well. And if one house goes down, your house goes down as well if you're moving in the area. It's normal. So you're trading like for like. So you're just securing yourself and you're hedging yourself in the housing market itself. Unless you're exiting completely, that's the only way it'll make a difference. The true health of the housing market is really down to the number of transactions in the market. In other words, how many. And this is that graph that we went back to in terms of the number of properties actually getting sold. So 109 properties actually getting sold in the week last week is actually still pretty healthy overall, because that brings us in at an average of the year, 109 times 52, which is 5,668. Now, around about 6,000 to 6,500 is the number of properties actually sold. So it's not the end of the world. That's around about a 15% drop in the number of transactions. If that still continues to be the average for the year, it's not a huge amount in comparison. It's just a temporary measure, I would imagine, because they say interest rates are possibly going to come level off and come down next year, according to the pundits. But we'll see what happens. We know what happens there. It's like there've been so many predictions, and it's like none of these predictions have really come true. Anyway, let's talk about what's getting listed in the market. quickly, let's talk about firstly what was sold. This was actually sold from social media. So in the right price points and the right properties will actually sell. So this was sold from social media. This one was actually Gilmore Avenue, and it was a 3-bedroom semi-detached house listed at offers over 180,000. And listen, several people missed out on this property. See what I talk about the price point. The price point is right, which is 180,000, which is in that price point I just spoke about. It's very, very affordable for some people. This was sold from social media, never made it to a website. Offer was received, the seller can't refuse. But more importantly, several other people missed out. So at that price point, there's still several people in the market for looking for these types of properties at that price point. So get something done about it soon if you're looking to sell, because you don't want to be selling in a market which is effectively possibly unpredictable in the next 5 or 6 months at this point. Okay, what's coming to market soon with us? What's in place in St Andrews? What's in place in Anstruther? A 2-bedroom apartment is coming on. Bankhead Place and Windygate's 3-bedroom terraced house is coming on. Braid Road, Kirkcaldy, very attractive area. Kirkcaldy is a 3-bedroom terraced house. Glendale and Leven, 2-bedroom ground floor apartment is coming on. Calms Wynd in Pittenweem, I did a pre-portal on that just last week. 2-bedroom cottage, which is a wee beauty. West End Cottage in Killessie, 2-bedroom cottage. That's also coming on. Brayhead Cooper, 3-bedroom semi-detached house coming on. Seggy Drive, Gar Bridge, 3-bedroom detached house will be coming on. That's the new Persimmon site. We've got one coming on there. Hunsey Street and answer that, a 2-bedroom terrace house. I tell you what, that is beautiful inside. It's a cracking property. But wait till that comes to market. Institution Street, Buckhaven, 2-bedroom ground floor apartment. Now, all these ones are coming on. They've all been signed up. They're all ready to go at some point in time in the near future. If these areas and that general type of property actually appeals to you, then message us now or contact us now and say, look, this is the one I'm actually interested in when it comes to market. Could you give me a heads up beforehand and tell me all about it? Absolutely. That's the whole point. There's one of these properties, actually, no, I've read out right now, has got an offer on already, and it's not even actually made it onto any social media channels. It's only, this is the first time we mention it, it's got an offer on it already, because we do off-market deals as well. So if you're not registered with us, you won't know about these properties actually getting offers on them and coming to market, or never even making it to market because they're getting an off-market deal done. And so that's why it's important to register with your estate agent, your local estate agent, and make sure your details are up to date, and make sure you hone your final details. In other words, what your price point, your price banding is. If you've got a budget of up to 250,000, the last thing you're going to do is buy a house at probably 120,000 because your budget's at 250. Technically, most people will buy from possibly 180 to 250 in that sort of price point, or maybe 200 to 250. So you give your estate agent the right bandings in terms of where it is, and then you tell them the exact areas where you're looking for or where you would consider, and then possibly the minimum number of bedrooms you would accept. And then the last thing I would say is maybe the style of property. So if you're not wanting flats or apartments, it's like rule them out straight away. If you're happy with possibly a terraced house, a semi-detached house, or a detached house, then tell them. Remember, a lot of these beautiful townhouses are all terraced. So don't write that off. That's the key here, because a lot of people actually say to me in the past, they're going, oh, I'm not really wanting a terraced house. And it's like, okay, some of these are Edwardian and Victorian houses are all terraced. They're beautiful stonework and beautiful inside with high ceilings and huge rooms. And then people go, oh, well, okay, well, yeah, leave me down for that. So that's why it's important just to not write that off and say that's not a category you want. Finally, then tell your estate agent what will be a deal breaker for you. So some people insist, I need a garage. And that's a deal breaker. If it's not got a garage, or if I even can't build a garage there, I don't want it. If it's not got off-street parking, I don't want it. It's a deal breaker. If it's not got a garden, I don't want it. It's a deal breaker. So these are the things that you would tell your estate agent when you're registering with them. What is your deal breakers? What is the things that they're non-negotiable? If it didn't have it, you wouldn't be interested in it. Regardless if it was Buckingham Palace, if it didn't have a garage or potential to build a garage, you're not wanting it. You're not interested in it. That's the type of things that are deal breakers. Let's talk about what's completed. So completed This actually gives a good indication about what everything's gone for in the last couple of months after they've been done. So High Street South in Crail was a 4-bed maisonette. It actually sold in 6 weeks at the time, and it sold for 5% over the home report value, which represented another £14,000 for the seller, which was perfect against the home report, which was ideal for them. It gives them a wee bit more money to have more choices. Todd's Green in Crail, 2-bedroom terraced house. It sold in 4 months, and it sold just under the home report value. But the new owners were happy with the first purchase, and the sellers were delighted to move on and move out of that market that we're in. High Street in Auchtermuchty, 2-bedroom upper apartment, sold in 1 week, and it sold equal to the home report value. So there you go. You've got one over the home report value, you've got one just under the home report value, you've got one just on the home report value. This is where the prices have now all caught up, which have gone up in the boom period, the 30% increase in the last 3 years. And now it's starting to stabilise because all these price increases have actually come through, and the market is levelled off at that, because that's what people can afford to pay in terms of what I just spoke about in terms of your mortgage, of what their mortgage purchasing power would be. And it's also reducing as well, as I said before, because what's happening is what they could afford at a 200,000 mortgage now, and the monthly payment every month is now a lot more every month. So therefore, they can only afford that monthly payment still, but that would only equate to a lot lower mortgage. So that's why property there's a 2-tier system in the property market up to 250,000, and from then on it's actually levelled off, and only about 60 to 65% of the property are actually selling within a short period of time. Short, I would say medium term time, which is round about the 4-month, 5-month period. Okay, the next one, it was sold and keys handed over, was Hawthorne Street in Methil, 3-bedroom upper flat, and it sold in 3 months, and it sold just under the home report value. There's another one. New owners delighted for their new project. Crawford Park, Springfield, 3-bedroom detached house, sold 3 weeks. Home report value. There you are, they're all coming through. Langhouse Green in Crail, 3-bedroom bungalow, sold in 7 weeks for just round about the home report value, just slightly under. Forest Place in St Andrews, actually a 3-bedroom bungalow, sold in 5 weeks for 9% above the home report value. And that represented a final of £43,000 more. It went for 518,000. Incidentally, let's just talk about what these prices went for, so you know what the prices of these types of properties. So if you've got something similar, you're like, wow, that's a big number. That actually give me quite a lot of choices. So High Street South in Crail, 4-bedroom maisonette. So it was above one of the shops. It sold for 294,000. Todd's Green in Crail, 2-bedroom terraced house, one of the ex-local authorities. It sold for 170,000. High Street in Auchtermuchty, 2-bedroom upper apartment. It sold for 160,000. Hawthorne Street in Methil, 3-bedroom upper flat, sold for 58,250. Crawford Park, Springfield, 3-bedroom detached house, sold for 200,000. Langhouse Green Crail, 3-bedroom bungalow, sold for 320,000. Forest Place in St Andrews, it was 3-bedroom bungalow, and it sold for 518,000. So that gives you a strong indication about where the property prices are in terms of what's actually finally being sold and what they're actually going for themselves. Okay, finally, let me talk about furnished lettings. I did that one. If you're a landlord, I think I didn't cover this at the beginning. If you're a landlord, furnished lettings could possibly, by doing these things, it could boost your income by up to about 21%. Depending on what market you're in, if you're in furnished properties or if you're in unfurnished properties. And I talk about this in detail with Karen yesterday. Karen's one of our letting agents, and we talk about it in detail. I've got about 30 years experience in this. So I even learned some stuff new yesterday, and that's what it's all about. People that read and learn the most generally earn the most as well. Okay, Wealth Creation Show tomorrow. Let's quickly talk about that. Wealth Creation Show. Now, last week was a good one, talking about SAS pensions, self-administered pensions, which were actually good for people that are company directors, also good for people that are high-flying employees and want to use a SAS in order to reinvest in their company, also into the property company as well, and basically become your own bank with your own pension. Really tax efficient for people that want to use SAS. There's a link in there for last week's show, and it actually has tools provided by Kevin Whelan, who was actually a SAS expert, and this, the pensions expert. and he's actually provided free downloads for people to use in order to make themselves as much more tax efficient as possible in terms of their suspension, and also what it is all about as well, if that's what you want to know. We're going to be talking about tomorrow, Richard and I, on the Wealth Creation Show. One of the most important things is being a lone wolf. This applies to everybody, by the way. There are a lot of people, I call them unicorns sometimes, people that, you know, they're one-off people, they're exceptional at what they do, but they tend to be lone wolves. In other words, they work by themselves, and they tend to be a jack of all trades sometimes as well. And that sometimes ties up all the time. So the most important thing is in today's world, it brings about success, is actually working part of a team. It's a team effort in order to achieve a common goal. And for most people, this is the only thing holding them back from reaching meteoric success in whatever they're doing. So how do you develop that teamwork mindset, and why is it so important? Well, Richard and I are going to be talking about this tomorrow on the Wealth Creation Show, live at 12:30. Now, you'll see it on my public profile, my personal profile. So Jim Parker, official Jim Parker. That's my two public profiles. Lettings Guru, I think, is the other one, my personal profile. But everything's public on my personal profile anyway. I don't keep anything private at all. Everything's open. An open book I am, to make sure everybody understands what I'm saying and how I'm saying it. Also, we're going to be streaming live on the YouTube channel. We're going to be streaming live on LinkedIn. We're going to be streaming live on Twitter as well, and TikTok and Instagram as well. And we'll be talking about this very thing. How important is teamwork, and how can you use that to reach meteoric success? So tune in tomorrow at 12:30 for the Wealth Creation Show with Richard and I. Until next time, guys, I'm Jim Parker for Fife Properties TV. Bye-bye for now.